So we have a bar for impact and we have a bar for return. But there should be no compromise between impact and returns. For some problems, philanthropy is right, but not for all problems. And for other problems, I think impact investing is right. We don't solve climate change in 2 years. I mean, like, this is a truly, truly long journey. I don't think you're having true impact if you don't also can do it at scale.
I'm Phoebe Stone, and this is Connected Capital.
To keep up to date with the rest of the Connected Capital series, please visit our website via the link below, or head to our Spotify and YouTube channels.
Today, I'm absolutely delighted to be joined by Pal Erik. Thank you so much for joining us.
Thank you. Thank you for hosting me.
It's a real pleasure to have you here as part of the video series. You're CEO of Lightrock, one of the world's largest dedicated private equity impact houses. And as such, you have incredible influence and responsibility in forming and cultivating this web of connection that we talk about on the video series. So starting with you and your role, can you just talk about your role as CEO of the business and a little bit about the history of Lightrock?
So the history of Lightrock starts with LGT. So in 2009, LGT did its first investment where you had an impact mandate, but also a return mandate. And since then, LGT grew this business by doing a number of investments through its balance sheet. Mm-hmm. And until 2019, this was run, call it, as an internal activity. Yeah. And then in 2020 or late 19, the board took a decision that we should be spun off and become, call it, an independent but still closely attached organization to LGT. So we prepared that in 2020, and January 1, 2021, we then became an independent investment advisor. Still very much working closely with LGT, but also having other investors and building an independent organization headquartered in London, but also with offices across Europe and the rest of the world.
And you've been involved as CEO for a few years now.
So I have been there for 4 years. So I joined to prepare what then became Lightrock and to spin it off, call it, from LGT, and build what has now become Lightrock, which has been quite a journey. Yeah. And we have grown. I think it's been sustainable growth, but we still have had quite significant growth. We're now 120 people, of which close to 60 in London. Yeah. Just opened an office for our public equity strategy in the Netherlands and so forth. So it's been, so far, both a fun and rewarding journey.
And now impact investing is fairly well known as a concept. Back in 2009, it was quite an innovative thing for the bank and the family to be considering, wasn't it?
First of all, I take no credit for what then happened. Others, like Prince Max, should take the credit for that. Yeah. Yes, absolutely. I would say NGT has been a pioneer of this asset class. And not only have you done investment, you also actually seeded a number of the funds, and you've really been very instrumental in building out the whole ecosystem of sustainable investing. And I think what's been important is also that we are able to attract different pockets of capital into this ecosystem. And here I would say maybe nobody has played a more important role than LGT. For
a client that's potentially new to impact investing, how would you suggest they weigh up the impact versus return argument?
So the way I think about this is that there should be no compromise between impact and returns. And if I start with our investment committee, the way we do it is that we look at a hurdle for impact, but we also have a hurdle for return. And that hurdle for return is a market-based hurdle. And we don't compromise or average between the two, and that's very important. And I would even argue that investing in more sustainable companies can be a good thing for return. Because in our industry, it's also about the longer term. And we hold the company for 5, 7, 10 years. At the time of exit, you still need to hold something that is attractive for the next owner. And the fact that the company does something, call it more sustainable, I think can actually be also beneficial to the return.
And I think it's the case that some of the industries that you invest in have got the highest potential growth rate out there, because the world around us is changing at such a fast pace. And even if some industries are in antiquated areas, they need to rely on whether it's energy efficiency or increased allocation to renewable energy as a proportion of their overall energy supply. So even the industries that are the most antiquated and slow moving at some level need to tap into the new age industries. The rise of sustainability has coincided with this rise of adoption of technology. Do you think a more sustainable, greener, cleaner, safer world would be possible without being able to leverage off technology?
That's a very interesting question. And I think there's a couple of things to say about technology, which in this context I think is relevant also from an impact point of view. So first of all, on the one hand, absolutely yes, the new technologies will be a great resource in terms of solving some of the bigger problems. We already see how AI is playing out in healthcare. Clearly, we are using these technologies when you also optimize the grid, etc., etc. On the other hand, the single biggest driver of energy usage right now is AI. So we are solving problems, but to solve those problems, we're actually increasing our electricity consumption. And in that specific area, it's actually exponential increase. So that also is a problem down the road that has to be solved. So I think, yes, there's lots of great about the technology, but it's also important that we don't forget some of the call it disadvantages of some of the new technology. The other very important thing around technology is, of course, how will we ensure safety and trust of the technologies, but also of the society as we're implementing these new technologies. And that's a very important area where we have done some investments, and we're actually, I think, investors who care about impact should take a more active role. Because we're sort of all now very accustomed to think that, and I think it's a good thing, to address healthcare challenges, climate challenges, etc. That's clearly defined within the remit, so to say, of sustainability or impact. I think starting to be more conscious about how some of these new technologies will be used should be as important. And we all know some of the AI and also robotics, etc., used, for instance, in warfare is an extraordinary risk to society. Cyber is another one, meaning cyber war or cyber security. And I think, again, as investors, we need to not shy away from also starting to take more responsibility into those domains.
And do you think the issue is that investors are too siloed in their thinking?
It's a good question. I think what maybe is the bigger challenge is that how some of these new technologies are being deployed is very hard, of course, to steer or control. And I think also it's an extraordinary fast evolving area. So it's just much easier to define the KPIs, track the KPIs, and ensure that when you do this type of health investment, it's sort of, you could say the impact risk is much lower. And that's also the case in energy transition. I think when it comes to technology, you could argue maybe the outcome risk from an impact point of view is just much higher. But I think still that should not be an argument to necessarily totally shy away from it.
Yeah. So impact investing is very popular now. It's something that most people would have heard of. What's the definition of impact?
So the definition of impact, I would say, is very much related to the sectors and areas of change that you want to drive. So if you talk about impact in the area of climate, for instance, versus impact in the area of health, it's of course quite different. So if I give you just some examples, we've done a number of investments around healthcare. So affordable healthcare, particularly in emerging markets, has been a big theme for us. It's been, I would say, great impact. Quite frankly, also been good investments from a returns perspective. Invested in a number of hospitals, to give you as one example. Another example would be in the area of resources and energy transition. There is, of course, a number of investments you then do around renewables, decarbonizing industries, sustainable transportation, etc.
Lightrock very successfully closed a dedicated climate fund, which focused on deployment of capital in Europe and in North America. Can you talk about your investments in climate-related areas? And do you think the environment around climate-specific impact investing has changed with an increased focus on the policy environment?
Our climate fund is called a diversified fund that addresses areas like energy transition. It addresses how to decarbonize industries, addresses how to drive more sustainable agriculture. It addresses also sustainable transportation. And on purpose, it's a fund where we actually have quite a diversified mandate. And also, as we look at the fund model, ensure that it's a diversified fund in terms of what type of climate technologies we invest in. This is both because we think that would drive most impact, but also because we think it's a smart thing from a returns perspective. And what I mean with that is that we would not do, call it all our investments in one or two technologies like hydrogen or batteries, etc. We want to be diversified also from a, call it, technology risk, as well as also be diversified when it comes to call it returns profile of the companies we invest in. So that's the climate fund. In terms of how it has been to be a climate investor, I would say it's been, of course, quite a volatile journey. If you go back 2 years, there was enormous excitement, lots of capital coming in. I would say there was maybe a bit of a hype. That hype has now come down. And for us as an investor, I would say that's a good thing, because it means that valuations have become more realistic. I also believe that there were quite a few things that should not have been funded. So I think if you want to create long-term sustainable companies, the most buoyant investment markets are not the best, actually. So I quite like more the conditions now. I think now it's balanced. I think capital is still very committed to solve climate change, but I think it's more realistic now in terms of what technologies will fly, what is required, etc., to bring it to cash flow positive and also bring the technologies to full fruition.
Can we talk a little bit about the client bank? Have you seen a widening or changing of the types of clients that are interested in investing in the Lightrock funds?
I think maybe a different thing that has changed a bit is that I think many, including also clients of the private bank, I assume, are increasingly interested in direct investments. And I think that's also maybe particularly true for impact, because it's a little bit in the nature of what we're doing. I think you're interested not only in the returns, you also are interested in what the company is doing. And then often you want to engage more directly with the company. And I find that to be a good trend, because also what we want to do is to find a way to catalyze capital that maybe also later can support the companies. And I think we've done that well together with LGT and clients of LGT. On interest for this, I think the area of sustainability has been called one of the winners in terms of attracting capital in what has not been an easy time for alternatives. Do I think this trend will prevail? Yeah, most likely. I think it also often links to the generational shifts that are happening in many family offices, etc., or in families. But at the same time, I think we work with the clients on a one-to-one basis, but we don't have the full overview. That I think I leave to you, Ashley, and I think you have a better view on.
Yes, one of the trends that I've seen quite recently is clients allocate portions of their money to different outcomes. And one outcome would be a philanthropic outcome, but increasingly clients are potentially reallocating some money that they previously put into the philanthropic bucket into the impact investing bucket. And I've had a number of really interesting client conversations where they're thinking about systems change from a corporate delivery perspective, rather than it solely having to sit in funding an NGO or funding a charitable organization.
So I think, by the way, the boundary between impact and philanthropy, I think, is very interesting. And on this, I have a strong view, actually. Happy to share that. So I think so. Philanthropy is a great, call it technology or way of funding for certain problems, but not for all. And where I think we want to play, and where I think our type of capital should play, is in those areas where you are, as I said, as important with returns as the impact the companies are doing. And I think if you then start to compromise on returns in some of these sectors, you start also to misallocate capital. So coming back to many of the technologies that are, for instance, addressing decarbonizing industries or energy transition, these are quite capital-intensive journeys. And it's important that capital gets allocated to the most sustainable business models, quite frankly, in addition to also the impact they're having. And if you start to then apply philanthropy or semi-philanthropy and different hurdles and so forth, the capital will easily become, call it, too fragmented, and also give the wrong incentives to these founders, because these founders need to later be able to IPO the company. They will attract other type of investors. These are long journeys. We don't solve climate change in 2 years. I mean, like, this is a truly, truly long journey. And here I think it's very important that for some problems, philanthropy is right, but not for all problems. And for other problems, I think impact investing is right.
And I think more and more clients are having that conversation, having that discussion within their families and with their wealth managers, which is an interesting one to be a part of. Can we talk a little bit about your journey? You've worked within private equity, and now can you talk about the importance to you of working in impact private equity?
In 2008, when the financial crisis hit, I had been working for, 12 years, and I was like just in that sort of mid-30s or late 30s. And I must say, seeing the financial crisis and seeing how that played out, and also particularly seeing who actually paid for it was such a shock for me. And I ever since have been thinking that I think as investors and as those that hold capital, allocate capital, you have to take a broader responsibility. And you cannot just always hide by highest possible returns and then regulators and everybody else should sort everything, because the financial crisis to me was a great proof that's actually not how it's working. So ever since then, this is what I wanted to do. And then I waited a number of years before I then made the choice to actually start doing this. And I think that was partly because at the same time, this was quite niche. And to me, scale is very important. I don't think you're having true impact if you don't also can do it at scale, because you can solve little problems, but solving the little problems is not solving the bigger challenges for the world. So I felt when I made this choice that timing was right, because I think also now we're able to attract and catalyze capital to also solve more bigger problems. And yeah, that was how I was thinking about it. And maybe, I mean, I'm very old, so I actually experienced the financial crisis truly like as a manager. I was in a leadership position during the financial crisis. I mean, most people maybe don't even experience it or remember it. So I think maybe I'm still a bit too colored by that. But I think for us who were like really seeing that firsthand, that was such a shock, and it made me rethink a little bit how the capital system works actually. And I think it's important we don't forget that.
Yeah. And I think this concept of impact at scale is so important, and something that Lightrock plays a really important role in. I often get clients come and ask me for the most innovative, the most cutting edge, the most transformative solutions to issues like biodiversity loss or the climate crisis. And first of all, often investing in those types of businesses comes with a much greater risk in terms of success. But also, if you have that conversation about impact at scale, the impact, if you're looking at the scale of these very small, very niche businesses, is actually very small, whereas Lightrock's approach is completely the opposite. You're looking at fairly, within the grand scheme of things, established, proven operating models, and then finding ways to scale that further.
Very true. And I think also another very important thing on scale is also for us as an institution, you need to matter. So the investment industry has also become an industry where you have some very large players. And I'm not saying we're super large, but we're at least at a scale where we're also relevant around the table.
Yes.
And you need to be relevant to advisors, quite frankly, need to be relevant to the founders, of course, need to be relevant to other investors. You need to have LPs that you can bring in that also bring scale and so forth. And I think that's very important, because if you can't do that, yes, you can maybe be a good supporter of the business in the beginning, but you cannot really stay the course and support these companies all the way to where you want to take them. So this is very important for me, and yeah, I feel it's gone well so far, but I'll do my best to continue, because I don't think it's much we can achieve without. And
the final question, Pal Erik, that we ask everyone that comes on this video series is, in the spirit of connecting capital and connecting people from different spheres, who would you recommend to come on this video series next to continue this conversation?
That's a good question. So without offending anyone, of course, I think there are many who I would recommend. I think we have a board member, Anne Cairns, who's also based here in London, who I think could be very interesting, because her background is very wide. So she was very senior in MasterCard, which is in financial sector, but she also spent time in industry. She's now working with us, but also I think one or two other investment companies. So she's just seen a lot. And I think she could be a good discussion partner. And then, of course, she's just much more fun and much smarter than me. So I think from that perspective, too, it'll be a better podcast.
Well, thank you so much for your time today. I really appreciate it.
Thank you.
Thank you.
To keep up to date with the rest of the Connected Capital series, please visit our website via the link below, or head to our Spotify and YouTube channels.